let's take a look at the MACD indicator and just kind of point some stuff out on it. So I'm going to go ahead and go into the settings here real quick, and we're just on the inputs tab here, and the kind of to take a look at this information here. The fast moving length right now is set to 12. The slow moving length, which is this orange line, is set to 26. And then we have it every line going forward, we're set to close. So each candle has to close for this to be figured out on the indicator here. And then the information here in the back is your histogram. So it kind of shows you buying and selling pressure is what we're looking at with the histogram. Now, this is set up using the EMA moving averages. So you can change that kind of stuff if you want to with the oscillator or the signal lines. You can go to the style and change different colors that you want. You also can change the histogram to, right now it's set to the histogram, but you could change it to where if you wanted it to be little dots or little crosses, lines, whatever you decide to do. That's up to you. Circles, whatever you decide to do. Now, this doesn't, it's more of a smooth line now. If you do choose change to something else, it depends on how you're going to use the indicator. Typically, though, it's all defaulted using the histogram information. With the bars, fill in the bars. Now, a lot of people use this indicator as when it crosses, you jump in the trade. Well, if you look at this, at the cross, it played to your favor on this time frame. And each time frame is different. What we like to do is use the time frames with the MACD to help us get clarity on which way the market's going in that direction. But if you're just going to look at the indicator as it is, the best thing to do is more break it down, and because it usually is delayed. Because you can see right here it crossed, and then it crossed again, went up a little bit, crossed again. It doesn't give you a clear direction. So what we like to do is say, okay, well, here's a zero line here in the middle. If the overall fast and slow, or the moving averages, fast and slow moving averages is above the zero line, you're kind of looking at your current market as being more bearish, or bullish, sorry. So this is more bullish settlement. So this has more of an area to push up. And then if it's down in this area, it's more bearish. So it's past the zero line, down in the negative side. So the other thing is if your moving averages are, you want to see if your fast moving average is on top of your slow moving average, this would be the bulls are pushing. That's also where this green and red comes into play. Because you can see as the slow is on top of the fast, you can see that we're in the red is showing up, and there's more sell pressure and a little bit lighter sell pressure is going on here. More buyers are stepping in and pushing it back up, but yet the RSI now is in an overall bearish territory, so this is more bearish. Now, we like to look at this on time frames. So I'd look at the 4 hour with the 15, and I'd want to look at the MACD. And you can see here with that idea of, yes, it did cross. We're up in the bull territory. It started to cross. And once this started to cross and push down, and especially once it came through here, this gives a lot stronger signal that we were in that territory, so into bear territory. So I'm going to go ahead and just mark this real quick, just kind of point this out. And the reason why we want to use lower time frames to help give direction. So if you look at the 4 hour, this is time stamped at 2 o'clock on Saturday. You can see that the 15-minute was sitting also in bear territory, but it was sitting more neutral up through this time frame. The 4 hour was showing that we were going down, so this was giving us a potential trade through here to take with our MACD and the 4 hour. So if you're going to use just the MACD and try to trade, the best thing to do is kind of like what I was explaining here, was use your longer time frames, your higher time frames, to help look for direction in the market. So this is giving us a better direction in the market, and you can look at the higher time frames, and the more you can put together and add this up, the more time frames, and you see the same thing over and over, you'll get more clarity. But the 4 hour, and then go into your 15-minute, and you can be looking for that pattern for it to break down with your other moving averages and stuff on the chart. But if we're just looking at the MACD and trying to trade off of, there isn't really any great strategy that's on the market that has high success. And that's why we use the indicator as looking at bulls, bears, and then looking at pressure in the market with the lower time frames. So that's the MACD, just kind of pointing it out. If you are looking at direction, we see pullbacks and then pushdowns, pullbacks, pushdowns, or vice versa. It's pullbacks and push-ups, pullback, push-ups. So we're looking at using the MACD to show direction till we see a change in that trend on the higher time frames to where we can do a reversal, and the MACD helps us out in that area to kind of see directions. We like to use for the cross and then push back up. This would give us a signal that we could be turning and reversing here. We'd be looking at the market for that idea and be trading cautiously at that time. Once it crossed back in, we were already still in bear territory. So once it crossed back into bears, the bears just showed that they were still taking back over on a continuous trend that we were already on. So that's a great way to use the MACD to help you trade. It's just kind of help you find direction in the market, not necessarily to take a trade on a cross, because you'll get a lot of confusing information. So hope that helps with you guys. You studied your MACD. There is a lot of information out there, but that is the basics on how we look at it, is just using it for trend only.